My first thing, and let me be clear, like I have not read up 100% on this. So this is just from my opinion from the things that I've, read so far. But when I hear about like stretching out that the mortgage, like, couldn't be more affordable, 100%. But then I always flip it to the side of things of like credit cards. Look at the way like people are using credit cards and maxing those out, and then how much interest, and like you never get anywhere with them anyway.
Welcome to the Leading Lane podcast for real estate pros by real estate pros with your hosts, Ashley Frederick and Stephen Birch. If you're looking for an honest, authentic, and raw perspective, you found it.
All right, well, welcome to the Leading Lane podcast. Today we're going to talk about the hot buzz right now in real estate, the 50-year mortgage. What are your thoughts, Ashley? Let's dive in.
Yeah, I mean, this is like 2 days or 2 days worth of all of this 50-year mortgage stuff. I think that at one time there was a 40-year mortgage. I don't think it was ever used much. I think I vaguely remember people talking about it, and I don't think it took off. There's the talk of the 50-year mortgage, I think, is trying to make a monthly payment more affordable, right? That's what I think the main focus is on. And I do think that there are a lot of other things that are being missed by doing something like that. So at least from the information I have and what I would see, I don't necessarily think that a 50-year mortgage would be good. I think that there might be very small circumstances where it would be good. But my concern is equity in your home, right? So they always say like real estate is a wealth building opportunity. Well, sure, but if you're on a bunch of 50-year mortgages and you're not paying down your mortgage at all, like the wealth isn't going to be there. So I think in my almost 15 years of real estate, like people were able to make substantial moves in homes because of what they had for equity, or people were able to take a HELOC on their house for either their kids' college tuition or whatever, home improvements, all those types of things. I just think that that's one big piece that would go away, like the actual equity that you're obtaining from your home. And I think the likelihood of someone, again, staying in their home for, 50 years, 10 years, what do we say, like 7 is the average that someone stays in their house, like you wouldn't have paid off that much. So then when we go to sell, like what are we looking at when we go to sell in that short of time frame? So that's like my initial thoughts. I have more thoughts, but I am interested as to what you think as just far as off the bat.
My first thing, and let me be clear, like I have not read up 100% on this. So this is just from my opinion from the things that I've, read so far. But when I hear about like stretching out that the mortgage, like, couldn't be more affordable, 100%. But then I always flip it to the side of things of like credit cards. Look at the way like people are using credit cards and maxing those out, and then how much interest, and like you never get anywhere with them anyway. And I think it's all about perspective and what the ultimate goal for that individual is. So sometimes you need to use the credit card versus pulling that out of your debit card and directly from cash. So I think that the other thing here too is it a stepping stone to where, I mean, what is the real average that people truly pay off that 30-year mortgage from start to finish without ever altering that mortgage ever? So no refis, no nothing, no cash outs, anything at all. I bet that's pretty damn slim.
Sure.
For people to truly not adjust their mortgage from the very beginning. So if you look at that, if you adjust your mortgage, once or twice, as far as like, are you going to stretch it back out to the 30, or, there's options that you can do there. Are they already really hitting the 50-year mark, or is it really the focus of the interest, or is it really the focus of the equity? And I think that there's so many different variables depending on what the person needs to be able to do for right then and there. I mean, it's going to make a few $100 a month adjustment on your monthly, but where is that going to get for that next one? But also, that very well could be stretched out for the 50 and can be an investment property depending on payment wise. And then now you're cashing out on the front end versus trying to cash out on the equity. I don't know. It's interesting to think about. Um, America, we're sure debt happy on everything that we do, but it's also wild to see realtors' opinions on these things. I watch a lot of the forums, and that's why I don't want to judge too much off of my reading because it hasn't been from reliable sources,
Yeah.
just opinions. But like, it's wild how quick people jump to the no and not understand the whole picture. I almost kind of want to say, like, in our market, we're primarily VA. We have a lot of service members. But I know in a lot of different other areas, VA is not really well respected loan. It's actually kind of a negative thing in some of the markets that I've experienced and witnessed. So I think it's kind of the same thing. Like, could you do conventional? Sure. Like VA, you don't have anything down. So is that helping you versus the next one of the options of putting 20% down? We don't know what that individual's financial portfolio looks like, and it may be the best option for them to go VA or conventional or what other options are out there. So I think it's that negative condensation that instantly sparks off with people that kind of makes me a little weary of saying no right off the bat.
I think I saw a lender that said something about that it would also be for like lower credit scores. And their concern was that they would be more apt to let those houses go like into foreclosure because the likelihood of continuing is not great.
Mhm.
I think though, in general, there's a bigger problem than just the year of a mortgage, right? So
Sure.
interesting that we're talking about like changing the mortgage to help affordability, but we're also still 5 million homes short. So we want to help everyone, but there's a huge supply and demand issue, right? Which I feel like if we could maybe focus, like what are some initiatives that we could do as far as the supply? Like, right, we keep on, and affordable is a blanket term because everyone uses affordability differently, but quote unquote affordable, sometimes we say workforce entry type homes, like what initiatives could offset trying to do a 50-year mortgage versus trying to have some incentives. Like when we bought in 2008, I think there was a first-time home buyer credit, right? It was like, I think 1 year was a $15,000 credit, and maybe the next year was a $7,500 closing or a credit. And to me, like, I guess that was like a little bit more skin in the game because yes, we got the $7,500 right away. And I mean, we like didn't have a pot to piss in. So that helped us tremendously on our closing costs, etc. But we still had to pay it back, right? So every year you had to pay $500 back. So I think it was a 15-year basically to the government, and part of your taxes, you paid $500 back. We didn't stay in the house for 15 years. So then at year 10, when we sold, like we had to pay $3,000 back to pay it off. So I feel like that worked really well. Like they got their money back in some fashion. Locally, like we have like down payment plus programs where people can get matching dollars. So I just feel like, I don't know if like the 50-year mortgage is the answer to what the problems are. I feel like maybe if we were looking at other things, like how could we help people with a down payment? Could we also help people in general? Like I don't think there's good financial literacy. I don't think that in high school or college, like I know for a fact, like knowing what I know now, I wouldn't have made the same decision. So like, are there other things that we could be doing that would maybe help people not get into credit card debt or learn how to save or, learn what a 20% interest on your credit card does for your credit score when it's not paid on time? Like, just think that I do agree, right? Like things are not affordable for a lot of people. So I understand the talk of a 50-year mortgage to try to make that happen. And maybe not 50, maybe 40. They go back to the 40-year route, and that makes it a little bit more reasonable for people. But I still think we have to look at the root of the problem, which is supply, affordability of houses. I think the average sale price is different across the country, right? But I think across the US, is it like $430 or something? Like there's a lot of people that cannot afford $430. Like what can we do to make, 200,000 cottage homes, right? Like, what are those types of things that we could be doing? I think there's just more things we could be looking at than just the mortgage years.
Right. And maybe it's timing, whatever. But if the government is so worried about affordability and everything else, maybe we shouldn't shut down for 40 plus days. Like, let's start there. Let's start actually working for the American people instead of working for your own pocket and, shutting the entire workforce, that DOD and everything else underneath it. Like, it's just wild to me. But I mean, you look at it too, like I saw one of the arguments on one of the forums was talking about, make houses more affordable. We'll sell, like, I get that. That's our goal. But just because we say we want to make it more affordable does not mean that we can just automatically get the price and reduce the price just because you think a builder's making a ton of money.
Right.
Like, there's a lot of things that go into that, all the different supplies and everything else, like all the inflation and everything that we're experiencing drive that. And I mean, I don't know about in your guys' market, but like there's still building that is happening here. Don't get me wrong. But the builders that are building tons of spec homes versus, one or twosies like they used to, because the profit margin is not quite there. You have to do multiple different projects to be able to get that return on investment with your crew and everything else that you have coming through. So I wish that the economics of it was just a snap of the finger, make everything affordable and it automatically goes through. But that's not how the world works. That's not how business works. I mean, I think that we have some people that don't understand the true meaning and realization of what businesses go through, builders go through, et cetera, et cetera. There's nothing there to bail us out.
Right.
So why we put ourselves in that type of position?
I don't know how it would work, but when I was like, I think somebody was like, what's your solution to the problem? Which there's some interesting ones. But I kind of think about it with a student loan. Like, do you remember how there was like a graduated plan? Like, when you first got out of college, you paid like whatever it was. And then like 2 years later, it graduated because your income was supposed to be going up with it. So I don't know, like, is there some way that every 2 years, like, right, you can get to like figure out a rate or an interest rate, like, because you're making more or things have changed. You know what I mean? Like, it'd be interesting if there's a way to do something like instead of just a 50-year, like, is there a graduated plan that every 5 years it increases? You know what I mean?
Yeah. Like it's an escalation accelerated type of thing that's going to happen on the front end. I think that's super smart. And then that kind of goes into, I kind of go to like, why aren't we doing buy down points, right?
Mm-hmm.
Like yes, I understand that we don't have the, the capital or the cash, or the buyer may not just be able to throw that down and buy down points. But I think that there's other incentives or other benefits, other avenues that you can go through that it's just not the purchase price. And I think that that's what we're focusing on. And that's where I was trying to get out of it, the credit cards. Like, nobody's bitching about the 28% or 21% interest on credit cards. But here we are, we're talking about a 50-year loan over, the 6%. Like, I understand that over 50 years, that's a long time. But there's no max, and to my understanding, on a credit card. You may be having that thing for 50 years, and you probably will be paying more interest than you would on a home.
Well, I think now on credit card statements, I think it tells you, like, if you only pay the minimum, like how long it'll actually take you, and it's like, whatever that might be. And I mean, like, that is crazy to pay, 28% on something. And there are some people that, something medical might happen or whatever, and they get stuck, and it's through no fault of their own, and their only option is to use a credit card, and then they're stuck forever because you have this 28%.
Right. And I also think that here too, like insurance, right? Like homeowners insurance, we'll start there. But insurance, like, it's going bonkers all over. Like, it is wild how much, homeowners insurance is, actually, like, premiums are going up to. People that are, on the coast and everything. I mean, I'm hearing $12,000, $15,000, $20,000 for insurance because of obviously flooding and everything else. But like,
it's more than their mortgage.
Absolutely. Like, it doesn't make sense. The formula for the mortgage is only like as far as the house itself is only a portion of what that monthly payment is. Taxes, I know there's some states that provide 100% no personal property tax. If you're disabled military or retired military, I mean, there's different levels and whatnot. I think that there's things that you can do on that level as well that you can get subsidized on the back end from the state to the local entities. So I don't know. I get frustrated with watching and seeing some of these conversations and not looking at the full picture, just trying to hurry up and get that quick fix.
Well, I think like that's just it. There is no current quick fix. I mean, even a 50-year mortgage isn't going to be a quick fix for everyone, right? I mean, there's just not, especially depending on what people's long-term goals are. I mean, like I think about here, we live in a medical community where a lot of people stay in their houses for maybe 2 to 3 years, right? So they would probably be upside down at the time if they did a 50-year mortgage, So I think obviously it's a case by case matter, but I think like as a society, we have to figure out other supply issues, other, down payment plus type things. I know a town, this is super interesting to me, a town near us, it's like maybe 5 of their larger employers put money into this pot. And then if you're an employee at one of those 5 employers, you can request a down payment assistance. And the goal is to get you to live within that city. So if you live within the city limits and you work on theirs, like you can apply to get like $10,000 towards your down payment, and then you have to stay with that company for like 5 years or something like that. But what a great way to have like the employers' dollars being used within their own city and to help their own employees to not, to have money down. So I think like finding more creative avenues as to just helping the cost of entry, if you will, come down.
Well, even think of it like, I guess my mind automatically went to single family residence. But I mean, look at it from if you got a duplex or, fourplex. And maybe the incentive is to be able to, okay, over a 50-year span for a fourplex or for a multi-unit type of thing, like, and then you get people in your property to offset the difference and whatnot. Like, I think that there's way to build inside of that over the 50, but I do agree
Sure.
it has to be strategic in some parameters that are set forth, not just handing out 50-year mortgages left and right, and that's going to fix everything. I think it goes back to your point of education. I think that there has to be a education plan pathway to be able to get them from the point of entry, like you said, to what is your end goal. And I think that's the difference of working, with financial advisors or somebody, the lender or whomever else, to be able to help you see those pathways and create those so that it aligns with what your end outcome is versus just going off that sole one decision that could honestly affect the rest of your
Sounds lucrative,
years.
but it does
Yeah.
it, and I mean, it's not to say even just in the current market that we're in, there are people that maybe shouldn't be getting loans, right? I mean, it takes us back to 2008 and people, got loans they shouldn't have, and we ended up in really bad situations. So I think, again, it's just everyone kind of playing their piece as your realtor, as your lender, as your local legislation. Like, what can everyone do together to keep people educated and to make sure that they know their options? And sure, if you come in under a 50, you're right. I mean, you don't have to stay like that forever, but maybe there's a specific graduated plan that we're going to lower that entry so you can get in on a 50-year, but our goal is that you need to refinance in 5 years.
I mean, it's almost like an arm, right? Like
Yeah.
do an arm and then be able to every 5 years then see where your interest rate is, and it stacks that way as well too. So yeah, I'm maybe really intrigued to see what happens here in the near future of not only with the mortgage, but what's going to happen with the government and all the craziness that is happening with the world on that side of things. I hope that we're going to see some positive outcomes for sure. I'm going to be a little optimistic with it. I would love that.
Yeah.
But also I'm not going to hold my breath and just wait and hope for somebody else to have that benefit for us.
Right. Exactly.
Well, great talk. I'm sure we'll be back on this topic because there's going to be more to come with it. So tune in next time. Thanks for listening.
If you've enjoyed today's episode, please like, subscribe, and share with others. Stay connected for more genuine insights and strategies to boost your real estate career on Facebook or check out our website. We'll see you next time.